Thank you, Kyle, Graham, and Mark, for our traditional review of your quarterly earnings. I want to give some warnings and just some disclosure before we start. First off, I am a private independent investor that manages a couple of funds. I'm an investor in Glasshouse. I own almost every security you can own for Glasshouse. I think I missed a series preferred one or two. But I am not employed by the company. I'm not paid by the company except for some cool trucker hats and occasional free products from Graham and Kyle. But so I am not, this is my own independent thoughts. I am wrong a lot. Please don't rely on my questions or my thoughts to make your decision on whether to invest or not to invest. Do your own due diligence. And with that all the way, I like to repeat why I find Glasshouse, why I keep doing this quarterly review going, and why I enjoy it, besides just I like hanging out with these three guys, is I think Glasshouse is really fascinating because I think it's the future of cannabis. And the future is, and it was right before we started recording, I was saying the same thing, is what Glasshouse is trying to provide is really good cannabis at a great price. And how do you do that? Well, first, one of the things that I think about is it wasn't until about 8, maybe 9 years ago now that as a society, we decided that we were going to try to grow cannabis at scale, and not only grow it at scale, but grow it at a very affordable, low cost. And so everything of what we're doing in society is kind of new. And so we've had tremendous failures from Canada to they just can't grow great cannabis. I mean, now you're having some craft in cannabis, but just spectacular amounts of money, billions of dollars have been lost trying to grow cannabis and failed crops. And one of my favorite stories is just Air Wellness losing power for 4 hours in Florida and losing an entire quarter worth of production. And it's part of what Graham has taught me is that the cannabis flower is very sensitive to mold, disease, and pests. And so it's really hard to grow it. That's why most of it's grown indoors. That's why most of it's very expensive. Glasshouse has been doing it now for how long, Graham? How long have you been doing this?
About 8 years for Glasshouse.
So you were one of the first. You guys have been one of the first.
About 30 years if you go back to the closet.
And so what they're trying to do is with the Farrar of greenhouses, and I've heard that from a competitor that I'm not making that up, is they have a state-of-the-art greenhouse and God's gift to the environment. It's very close to where I live, where they are trying to grow cannabis, kind of precision agriculture at scale, utilizing the natural environment. And right now they have about 40% of this 5.5 million square foot greenhouse occupied and utilizing, and they're able to produce it at a cost that no one else is able to. And so I am endlessly fascinated as they scale this up. The decision-making they make, I think it has profound implications for the future of cannabis. And that at full capacity, if they're able to sell it, and we're going to get into this, outside of the state of California, then Glasshouse will be one of the most valuable cannabis companies and will be one of the most valuable companies, I think, around. And so it's endlessly fascinating to me, just as I believe that they're one of the pioneers on how you make great, consistently low-priced cannabis products for everyone to enjoy. So anyway, that was my my spiel. We'll get into the questions now. Anyway, so thank you, Kyle, Graham, and Mark for doing this again.
Thanks for having us.
Aaron, we always enjoy getting together with you both. You know, one of the things that I appreciate about you is that you put the work in. You know, as an investor, you go out there, you get your shoes dirty, you ask a lot of questions. You always do it with a smile, but some, you know, that you never hold back. If you have some on your mind, you always ask it. And you'll call us up, and we're always, I mean, look, you've been with us a long time, as far as just, we've all got to know each other and built a trust. So we appreciate what you do, and we're happy to be here.
Yeah, I don't think anybody's had more visits to the farm over the years than you have. So if anybody on the investment side has had an opportunity to watch the development, I think you're at the top of the list.
It's been really cool to watch.
And here's the thing: if people are listening to what you're saying, and it was clear, you said, hey, you got to make your own decisions to do, you know, don't just listen to Aaron. But we make it easy. Every year in June, anybody who owns one share, so today for less than $10, you can buy a share, and then you can join us out there, and you'll get the tour from Graham and me. Probably meet you out there. You'll meet our Mark Vendetti, our CFO. You'll meet Halal Tapsh, our CRO, Ben Vega, our lawyer, and you'll meet a lot of other members of the team. So you'll get a good feel for Glasshouse and that Ferrari engine that really drives us. And so we're very proud of that, because we want that kind of transparency, not just for you, but anybody that's watching this, anybody that buys even one single share. We want to be able to communicate and let them know what their money is invested in.
Well, that's great. I want to dive right into your quarterly results. The first thing that hit me is I was surprised that pricing was so weak in the quarter. I had thought that pricing was firm, but I thought we were following a normal seasonal summer pattern, and the guidance indicates, or what you were describing on your call and in your press release, is that's not the case. And I'm just curious of what are you seeing? You know, why do you think prices are so weak? What are your thoughts?
So real quick, double-edged sword. When you read the results, yes, the pricing wasn't where we'd hoped. It did follow the usual slope. It just went a little bit further, you know, down than we thought it would go. But as far as seasonality, it's doing what we expected it to do. So when you actually see the graph, it's in line, except the pricing did come down a bit. At the other side of the coin, the team grew more than we thought we would grow. So that it wasn't just oh shit, it's also okay, wow, team did amazingly well. Pricing pressure was a little bit stronger than we anticipated. Mark, you want to jump in on the pricing, because I know you were all over it.
So Aaron, just as Q2 unfolded, really through, I'm going to say, the first 60% or so of the quarter, prices behaved pretty in line with what we thought they were going to do. And the seasonal dip that we expected to start in July, kind of consistent with what happened last year, basically started about 6 weeks sooner than we anticipated. So right now the market is a little bit between 2022, where the prices bottomed in July, in 2023, where the prices bottomed in September, in October. So it's happened a little sooner than we expected, and right now is a little lower than we expected, but it isn't dramatically different from an overall perspective. We've just, again, carried the trends out for the balance of the year. Longer term, we think we're on the verge of what is, again, almost destructive or economically not viable for a large part of the cultivators in the state. And we could see another round of, you know, cultivators leaving the market at some point, you know, later this year or early next year, given there's always a lag between when the low pricing hits and when people start leaving the market.
Yeah, and maybe to jump in there and put those two things together, because I think there's a really interesting point, right? That at the same time that we're saying that we may be at a level that's economically destructive for other operators, our wholesale business did 58% margins, right? So
No,
like,
that's right.
there's this world where it's kind of, sure, we love high prices, more margin, more money, and et cetera. But I think as we've always said, right? We know we don't control pricing cycles. What we control is the quality, consistency, cost, and production. And on those metrics, I think we had a record-breaking quarter by all numbers. And at the end of the day, I would much rather see a $10 reduction in cost of production than a $10 increase in average selling price, because the cost of production is forever, right? So we like saving money over there. We like growing quality, consistency, and scale, and doing it efficiently. And we know we don't control pricing, but if we're far enough on the left side of the cost curve and high enough up where we aim to be on the quality curve, then whatever happens works great for us. The path to consolidation means some hard times. So like Mark said, it may have been 6 weeks earlier, but it's not necessarily a surprise. And it's kind of into an area where we really thrive. So if we can do 58 margins and other people are questioning whether or not they want to stay in, is not a bad place for us to be.
I reached out after your quarter to a private competitor, and in colorful language, he explained that and it's unfortunate for them, but that the small cultivator is, he used much more colorful language, is screwed at these prices. And this goes to part of what I've been so bullish about, is that as the low cost producer, and I was actually explaining this, when people will call me and say, hey, what do you expect for the current quarter? And what happens if prices fall? And some people are like, oh, I think there's a risk if prices fall for glass house. And what I explained is that in the long term, in a weird way, lower prices actually help you, because it just removes the competition. Because it's just it's not economic for them. So.
And we don't want anybody to be screwed. They're not screwed because of us. They're screwed because if you're caught in a world where the onerous taxes and over-regulation and not enough stores that pay their bills, and you can't get access to the other 310 million people that want to buy your product, being small, it's just very hard to amortize your costs and cover the overhead. So, we keep pushing and we keep looking for ways to make this market what it should be, which is those small producers, no different than a Screaming Eagle or a Opus or Gargiulo or whatever, right? Like if the 7-Eleven is not their market, the market is the connoisseurs out there. I mean, at the Cal State Fair, the Golden Bear winner for outdoor was cannabis. It was I think 9% THC, right? Like there is a market for that out there for the people who appreciate it. You just need to be able to send it direct to consumer, and then all those small farms do great as well.
Yeah, no, that's right. But to the point about supply and demand, this is part of the issue, is that you saw a real crash in prices in 2022. You had 26 million square feet of cultivation leave the market. And if these prices maintain, you'll see even more. And I was actually just talking, hey, Kyle, you'll like this, just about supply and demand with a friend's teenager. We were actually talking about rent control, totally different. And I said, one of the things that happens in markets is that what they say is the cure for high prices is high prices, and the cure for low prices is low prices. And price is a signal, and it signals to the market. So anyway, so I appreciate that, but I want to go to actually the production side as my next question, and you highlighted it. But actually, when I was thinking about how this quarter was going to be, just to show you how wrong I was, not that your quarterly results don't really impact me because I have a very long-term thesis, as I explained, but I actually thought pricing was going to be fine. I was actually really worried about production, because I don't think people fully realize just how terrible the weather was in Q1 and Q2
Right.
for in Santa Barbara and Southern California. It did not get sunny until like mid-June. And I have to be honest, I'm completely shocked that you had a 15% higher production. I can't even imagine what the production would have been if the weather hadn't been so terrible. So my hat's off. I really am curious, like, how did you produce so much with such low levels of, I mean, you probably have all the data of how much sun, but we had it was very little sun.
January lasted till June this year.
Yeah.
Pretty much. We had a pretty good April in there, but other than that, it was definitely a rough, cold, and particularly foggy a front half of the year. I mean, we got a great team who adapts and tangos well with Mother Nature. We were able to get Greenhouse 5 up and rolling, and so we got almost a full quarter's worth of production in there on that. Greenhouse 5 performed well. The changes that we made reap benefits, and I think it's hats off and kudos to the team for taking what was not any kind of layup and turning it into a pretty solid 3-point shot.
Am I crazy to think that there is, if we just have normal, we have normal May, grade, June, go, whatever, but if we just have normal, not like extreme, because the last 2 years it's been kind of rough. And we're spoiled here. I mean, this is part of the thesis. Like, if it's not 72,
isn't so bad, but
if it's not 72 degrees and sunny, like after a week, everyone in Santa Barbara just starts complaining. So this is part of my thesis, is that I've always known is like, I just don't know if people fully appreciate how incredible this weather is. But if I look out to next year, we have just a normal. Am I right to think that you should have just a little bit more production next year if the weather just cooperates a little more?
I mean, sunlight is our biggest input. So, it's beautiful when we're down here. It's our biggest input. It's free. It's an environmentally, zero impact. So, it's a beautiful thing. We do, of course, when you're dancing with Mother Nature, you get what she gives. So, you can see a pretty straight correlation. 1% more light is 1% more production in most instances. So, if we get more sunshine, we will grow more weed. That's pretty much how it works.
Okay. Well, as you mentioned, I'm a frequent visitor and I keep seeing all the improvements. I saw the optical sorter. You showed it during your investor sesh. And I believe you mentioned that you could sort some crazy amount of cannabis per year, and that you're also upgrading some aspects of Greenhouse 6. I see your COGS at around 130. I know your goal was 100 and possibly even further. I'm just curious, when do you think we might see some further jumps, or actually not jumps, but declines in COGS, where you can pass even more savings on to customers or drive even more production? When do you think, do you still think 100's possible?
Under $100 is still the target, and no change to that. And I think we've pretty consistently delivered around 5 to 8% cost reduction over time. Our target for Q2 is 150. We beat that at 148. That included the ramp up of Greenhouse 5. So we're able to get that running and do it efficiently at the same time. So, I mean, I think you're going to continue. It's not going to be less likely to be a step change reduction, and more likely to be, that glide slope down to that. So we continue to chip away, 1%. It's gonna be a collection of 31% here's and 1% there's versus 30% change. But everything we do, I mean, post-harvest is where a lot of the investment goes to dry, cure, hand trim, QC well. And so that's definitely an area we're focused in. As we scale, it helps amortize fixed cost. Think of something like property tax. More pounds you grow, the less dollars per pound is the property tax or insurance component, because those don't really change that much over time. And then the rest is just how do we find places to save seconds here without impacting quality, or yield more to make the denominator bigger. That's a big help to everything. So yield more, raise the quality, and do it more efficiently is basically what the team wakes up and does all day long.
Got it. Okay. And so I want to get to the most exciting part for me is hemp, which I was shocked. And I was actually wondering, just to be honest, I was wondering, like, hey, does Glasshouse even need for me to do this quarterly call? I mean, they're on this trajectory. It's not that exciting. I mean, I'm sure it's exciting, right? But it's like, is stuff going to change very much? And then you like throw out hemp and you covered a lot of this on the Mark Hodes Spaces. And I want to encourage everyone to listen to, but I wanted to back up and just try to understand hemp from the basics. And just so everyone knows, it's the 2018 Farm Bill. Congress, whether on purpose or inadvertently, they basically said if you're grown on a USDA certified hemp farm and you cultivate cannabis or hemp that has harvested with 0.3% THC by weight or less, any cannabinoid derived from that hemp is not on the Controlled Substances Act and is federally legal. And what that has led me to do is I have been very active investing in hemp beverages, which started exploding in Minnesota. States regulate the beverages, and now it's spreading like wildfire. Now it's here in California, even though our governor mistakenly is trying to ban it. And so it's spreading. And so one of the problems that Glass House has is you just sell to California, and there are interstate commerce restrictions, even though Graham, Kyle, and I, we've talked about this. We believe it's unconstitutional to have these restrictions. Doesn't matter, the states are enforcing this absent federal reform. But what started to happen, and what I haven't been an investor in until now, once you guys start producing it, is people are making a THCA flower, which I really want to get into the minutia of, so you can explain it to everyone, Graham. I only have a very basic understanding of it. And they're selling it in smoke shops everywhere, legally, federally legally. Some people selling it online, direct, credit cards, banking, everything. And it's really popular, obviously, in places where cannabis is illegal. And so I wanted to, before we get into the flower itself, I wanted to more understand, Graham, when I think about a cannabis plant that you're currently growing, it's all behind you, and I think of hemp, is growing it different?
We're just real quick.
Yeah.
Let me just let Graham get into all that because you're going to be amazed. I just want to make sure we're clear. For housekeeping, we have not announced that we're going to go in that direction. What we basically,
Yes.
I want to make sure we're clear so that nobody is expecting us to ship to Florida tomorrow.
No. And I was going to get into that. Exactly.
So let me,
I should have made that more clear, that you're contemplating as you grow, as you modify this greenhouse, you could go either direction. And it won't be for like 16 months. We'll get into all of that, right?
So, and here's the thing, from 30,000 feet, this is capital allocation 101. It takes no real difference here to grow this plant from this plant. And Graham is going to explain exactly the differences between these plants or not. But we will basically, just from 30,000 feet, we were overly conservative in making sure, because we're having these conversations. Aaron, we're the only company that I know in this space of our size, publicly traded, that has to answer for pictures of our products in other states. Most of it, like the other companies, the MSOs, they're not having that issue. So for us, I was so concerned, and we didn't have consensus on the senior team. I just said, I would rather overly disclose that these conversations are going on. If it's a better return on like a cash on cash basis, and we find it to be legally feasible to do it, that's the direction we're going to go. If not, then we'll just add more to the California market, and prices are where they are. We're the cheapest grower. We'll just go. So with that said, you asked a very good question. Everybody keeps coming up to me and asking this exact question. What's the difference between cannabis and hemp, Kyle? I don't understand. So Graham.
So the difference is the regulatory structure that you play towards, right? And that's the beautiful thing, and why we're evaluating it is because if you think that we're good at anything, 100% of what we're good at is applicable to growing licensed cannabis for the state of California or Farm Bill compliant hemp for the rest of the country. So, whether all the things that we do, all the way from the flower to the edibles, we can do those same things with the same skill set under the Farm Bill. And so, as we talked about, right, what we do in the greenhouse, there is no difference. We would not set up the greenhouse different. We wouldn't add things. We wouldn't take things away. So as we go through and looking at our expansion, we wanted to maximize the optionality, right? It's unlikely that we will not stop doing what we currently do for the state of California, because the rules in the state of California then is that cannabis is sold through dispensaries. In parallel, though, and in a separate greenhouse, we could also be growing in compliance with the Farm Bill, which if you head to Texas or you head to Florida or New York or Virginia or Nashville or a bunch of states around the country, you will walk into a hemp dispensary. Texas, for example, is said to have 7,000 hemp dispensaries, which are selling all the same things that we sell in our 1,200 dispensaries here in California. So keeping our optionality open, exploring that, and the ability to run it in parallel, and the fact that you don't need to do anything different in the greenhouse sets us up really well, we believe, to be able to succeed in either or both of those markets. If we want to live in a world where you have a different set of rules for Pilsners than you do for stouts, if Ron DeSantis wants to say no in Florida to marijuana, but he wants to say yes to hemp, then we would absolutely love to bring our award-winning hemp that we grow here at Glass House and ship it to make consumers in Florida just as happy as the consumers in California.
So I want to, one of the reasons I really want to understand this is that when I think about Glass House, you're able to make great, really good cannabis for just an unbeatable price. And does the same dynamics that allow you to grow, because I just don't know much about the THCA that's generally, maybe you could just explain to listeners what THCA flower is versus what you're currently growing. And so do the same dynamics play out where you can produce it for a really low cost, where the capabilities of Camarillo facility, you just can't match it anywhere else? Can you explain through that?
Yeah. Every skill set we have, the hundreds of years of collective experience that our team has, the capital investments and the climate, everything is 100% portable. To a hemp plant and a cannabis plant, they do not know that they're different. The only difference is that we put a different label on them. Under the Farm Bill, hemp is defined as being less than 0.3% Delta 9 THC. So anything that matches that, the testing standards are different. How you do the testing is different. That is the crucial differentiator. Is it below or above 0.3% Delta 9 THC? That is a cannabinoid. Another cannabinoid is called THCA. What the A stands for is acid. And so does the acid form of THCA, and that is not a cannabinoid that is regulated by the Farm Bill. So if you can grow a plant that is high in THCA, which also when consumed and combusted and heated has a psychoactive effect because it converts into Delta 9, then you can grow a plant that is compliant with the federal Farm Bill and open up all kinds of doors, like not having 280E, like shipping through the United States Postal Service, like being able to take credit cards, like being able to advertise, a whole bunch of things in a bunch of states. If you look at California, which we already have our lane in, and you look at Florida, and you look at Texas, and you look at New York, you're talking about 33% or so of the population of the United States just in those 4 states. So if we have our California lane open and there's a lane and a path to reach consumers in those other states, then we absolutely we're excited, looking forward to being able to compete in the rest of the country. And if the Farm Bill allows us, I think we all think we're going to get there. So if the Farm Bill allows us to compress time a bit and do that sooner, then we're all for it. And
if I think about like the quality and the growing, that because I know, because you can look at the plant, anyone can tour, just like Kyle was saying, come to the investor set, you see the plants, you see the uniformity, you see the color, you see, and by the way, I forget what you gave. It was some galactic term, and I gave it to my neighbor, and absolutely loved it. Whatever you gave me last time.
Yeah, awesome. That, I mean, at the end of the
Anyway,
day,
it
that's
was
what
so
matters.
good.
You got to make stuff.
And so,
people like.
but what I wanted to know is, do does the same thing if I lined up? Is it more of a commodity? I guess is my question. Where if I had a glasshouse THCA or hemp flower versus Aaron Edelheit's, would I know the difference? Would the cost structure be different? Why couldn't I just grow it outdoors and who cares?
Yeah. For all the same reasons you can't do license, for all the same, everything is the same with what we're doing today in growing farm bill. Like, it still takes controlled environments help. The team is important, consistency is important, quality is important, scale, cost, all the same things. It's no easier to grow something that meets the definition of the farm bill's hemp. The plants don't care. That's the key thing to remember, right? They don't care if they're being grown to a farm bill standard or a Prop 64 standard. You got to do all the right things to make them happy to get the results you want on a consistent basis. So there is nothing easier.
So to get that quality and cost, it's the same thing. You have the same advantages. The only difference, and this is what I love, it drives them insane, the absurdities of cannabis, the different regulations. But I actually love it because I actually think it's all untenable. So the more absurdity, the better, because then it just blows up the whole set. That's my theory.
I think you're spot on with that, and that's one of the things that we're like. We're living in a world where the same thing is not allowed in a place, the same thing is allowed in one place, and allowed in a different place under a different name. And I think that analogy of like, could you imagine having a different rule for a Pilsner or a stout, right? I mean, that's the world we live in. Now, we know states' rights is amazing, and in some places you can't buy liquor at the same place as beer, or you can't buy this, or it's a state-run store. Great, every state should do what they want, but the idea that we have all of these things by different names and treat them like they're different is absolutely absurd. And I do think there's some chance we're getting to that really slow and then all at once stage of this, when we finally realize, like, everyone, you can walk in downtown Miami and walk into a store, there's no difference than the pharmacy here in Santa Barbara with the same products, just a different name on it. And then and by the way, here we're testing for pesticides. There, they're not. When we do it, we will do it to the standards that we do everything, which is the highest possible standard.
And people will know it'll be California sun grown. Can you have the same genetics?
Know what they want.
Could you have a hemp lilac diesel? Can you do that kind of?
Yeah, as long as you grow it to the standards of the Farm Bill, absolutely. Our intent, goal, plan would be
if we get
no different than the award-winning stuff that we grow already.
If we get to 16 months and you're doing this and you're selling, I have to imagine that this is like a forcing mechanism for like national regulation, because you can't be alone. I've got to imagine all your competitors in California are like, wait a minute. Why can't we do it? Like everyone, I know this because I'm talking to companies in various parts of California. Everyone's like, oh yeah, we saw that. We're watching.
Yeah.
So here's the thing, Aaron, you can imagine some people in California are already doing it. And I would say that my guess is, and this is purely speculation, so let's note that they're doing it a little bit haphazardly, potentially. We don't have that option. If we decide to do this, if that happens, we are going to have to make sure it is crystal clear, because we'll do it at a scale, we'll do it at a quality, and we'll do it at a pricing that will be disruptive across the country. And that's going to upset a lot of people. And to your point, Governor DeSantis vetoed a bill that would have restricted hemp. That's what the legislature wanted. He vetoed it. So he went on hemp, and he's against Kim Rivers' cannabis bill. And so he's put himself in a very interesting situation. So how would he feel if he sees a big billboard right there in Tallahassee, in Miami, saying, get your California cannabis delivered to your door, Farm Bill compliant, from the largest seller of cannabis in the state of California? He may go, wait, what? And so that's why we are looking at, number one, we're expecting the regulators from everywhere to show up at our farm. And so if we do this, it's going to be crystal clear. We follow the law to a T, and we will document the heck out of it so that we're going to be disruptive, but we're going to do it to a T. And if things change because of our entrance, which is also on the potential decision chart, then we would be ready to go a different direction. Nothing slows this gritty team down, but that excitement that you're showing, you can imagine the idea that we can sell our cannabis legally outside the state of California is very tantalizing. And that is the future. That's what we've been building for.
If in Virginia, it is legal to consume cannabis, but it is illegal to buy it anywhere. There are no dispensaries. You could just have a business potentially selling to a state like Virginia. I mean, that's the absurdity of cannabis. So, but yeah, no, thank you.
Direct to consumer with your American Express card delivered by the United States Postal Service to your mailbox.
Yeah, you could subscribe. I am a subscriber now to like 4 cannabis beverage, and every month it charges my credit card, shows up at my door. It's absolutely amazing.
It's the way
my only problem is I give away so much of it that I need to sign up for more subscription. But anyway, that's a side note.
And is it 5 years into 6 years almost into Prop 64 and legalization? Doesn't it look more like what you expected everything to look like than anything else?
Yes.
And that's the irony. This is what we thought we would be getting. We just didn't realize we'd be getting it like
and this is the point. There are a lot of people out there that are like, especially in regulated cannabis, or especially who have invested a lot in the limited license model, which I'm not a believer in. I don't believe that the long-term charging medical and just recreational consumers abnormally high prices because you've restricted production, you've restricted supply and dispensaries. I think that is a very short-term model, and I don't think that it works. And I don't think it's good for our country or the consumers, but that's a side point. But like the idea that there's a legal way to consume THC and to buy and to sell THC, however absurd it is, the idea that people who are pro-cannabis and want legalization or reform would fight that way and shut it down to keep limited license and the absurd nature of how we produce and sell cannabis is so utterly wrong. We should be experimenting or pulling the legality of hemp into the regulated space and just make sure everything is regulated and tested. That's what we should be doing. We shouldn't be fighting the one way that is legal, that consumers obviously love. Anyway, that's a side note. I want to go back. I know you guys agree to the unit level economics. By the way, again, Mark and the entire team, I wish every cannabis company gave the level of detail that you guys share in your earnings release very clearly by division, by unit level economics, gross margins. It makes it really, when I look at hemp, I think you mentioned on the call and on the spaces that prices are 2 to 3x. Do I have that right? The 2 to 3x from a selling price?
I would back up on the 3x. I mean, there's 2 different markets to look at, right? So one is the wholesale market, where I'd say we see pricing in like the $600 to $1,200 range out there. So think of it like California prices to 2x California prices, something like that. And then there's also the direct to consumer side of things, right? Where if you can imagine, you see pricing there in like the 14 plus, $14, $25 an eighth model, right? If you think about what we do with Allswell, we're selling it happily in our stores at 62% margin at $7.50. Now, you don't have to throw the extra taxes on there that brings it up. You're still walking out the door here in California for under $10. But imagine if that was at $15 shipping direct to consumer without all the crazy taxes on it, right? Like for us, we would be able to be some of the best value product in the market and still be significantly higher than we sell it for happily in California.
No, okay. And what about the cost of producing? Different regulations, different fees. How would I think about, you're at like $150 a pound now. Have you done any analysis, or you just don't know about like what the cost of hemp would
Yeah,
be?
so from the growing side, what the plant wants, there's not really any difference. So from the regulatory side, there's a significant difference, and think there's probably a good line of sight to around a 10% cost reduction just right off the bat. I mean, if you think about the fact that we don't have to have licenses, for everything, right? We don't have an annual license. It's $900 unlimited versus $100,000 a month for licenses on cannabis. You don't have to put tags on everything. You don't have to take tags off everything. There's not a municipal level gross receipts tax on it anymore. If you think about all those kind of frictions that come away, then I think there's probably a pretty good line of sight to reducing costs by around 10%.
And so this begs the question, we fast forward today. I understand now why you wouldn't, but if I fast forward and everything exists the same way we're talking now, and you're producing hemp, you're selling it, and prices are double, it costs 10%. Why wouldn't all of your greenhouses, why would you just convert it all to hemp? Is it a risk thing that you just don't have the total regulatory clarity, or like, why wouldn't you all become hemp and then just 100% hemp?
So Mark, being a very seasoned, publicly traded company CFO, his head explodes when we start doing wild speculations. What I would tell you is, and Mark,
my question was for Graham, not for Mark. No, I'm just kidding.
Yeah, no. And then we're all going to get a text from Mark going, guys, what the hell? It sometimes almost feels like he's the sane guy between the two and Dumb and Dumber in the van. Guys.
Yeah, that's right.
In any case, sorry, that's a bad. What I would tell you is this, Aaron. I think it's vitally important, if you want to be a successful brand in cannabis, to hold home court here in California. You have to own California. This is the home court of all of cannabis. I don't care if you're Cookies. I don't care if you're Stizzy. I don't care if you're us. This is vital. So we're everything we do, I think, when you see it in the rearview mirror, is very logical, very plotting, numbers based. We have 3 greenhouses, right? We have 6 greenhouses, one of which is for propagation, leaves 5 for flowering. 2 we already have turned on. That means we have 60% not turned on. Before we even talk about these 2 over here and the 2 that total 500,000 square feet up in Santa Barbara, I think what I would stay focused in on is greenhouse 2, then there's 3, then there's 4. I don't want anybody in the state of California to think for a second that we're contemplating exiting the great cannabis that we serve to them. We just won a big award. That's where our focus is. But everything we do is logical. And so, yes, we understand your question, but I don't think speculating on that at this point in time is
that makes sense. Yeah.
Yeah. It's also important to realize that when you're talking Farm Bill, you're talking, it's a web of regulations, right? So you have not just the state, or not just the federal, but also the state regulations. In California, well, obviously we're growing and selling everything that we're today well within the state of California. California's, the way that they want it is that these products are sold through dispensaries. You know what they're trying to do with AB 2223 is actually make that more clear and more strict, right? So to serve the California consumer through dispensaries, we need to have licensed cannabis. As Kyle said, we're not leaving California. That is our home court. That is also where we learn everything. This is where we have our customer base. So the beautiful thing about this is it doesn't have to be either or, right? We can do both, and we can do it in parallel, and we can do it in a way that maintains optionality. We know, I mean, the Farm Bill's up for, it's a 6-year bill. It was done in 2018. It's up for change. The beautiful thing is, again, we don't do anything different in the greenhouse. We don't need to make a decision right now. If the rule changes, it's not going to change overnight on us. So even if we're fully down this path and they make a change in the Farm Bill that closes it, I don't think they've got the votes to do it before the election. So maybe it's 9 months from now. If they make a change where this changes, okay, we'll finish that crop out. We'll put a license on it. We'll keep doing what we do under the license model. So the real thing is we can have our cake and eat it too to some degrees because we don't have to pick a path. We can be in both.
Gotcha. And
just so you know, Aaron, we want the state of California to succeed with a very successful cannabis, hemp, all to us, it's kind of the same market. And we want them to be more business friendly to get the illicit market into this. Think of what's best for the consumer, what's best for all of us. So right now, we really believe in California. We think that winning the Golden Bear is something that very few companies out there that we compete with on the large scale could have done. So we're super excited. And I just want to make sure all the conversation we're having with people here in California, we are committed to California and believe you must win here to do everything outside of here. So that's
I agree. I agree.
But again, I love the question, and you probably wouldn't be surprised if you're not the only one who's asked that, including on Twitter.
Yeah, no, because it's just, I mean, because the whole key to your company and your long-term strategy is to be able to really sell nationally, if not internationally. And I think that, I was getting frustrated with the lack of interstate commerce, and maybe interstate commerce is already here, and we just are just suddenly realizing it. But I wanted to just ask one last question on hemp, which is, if you mentioned this, Kyle, you guys are now thinking about this in other California, like, is this going to be, are we going to go out a year, and if there's not much change, are we just going to be seeing a tremendous amount of California West Coast companies just produce, really leaning into hemp? What would be your prediction from what you see of your peers, competitors out there? I'm curious.
I would argue, yeah, you're already seeing it to some degree.
You say, Kyle, for God's sake, man, go ahead.
I was gonna say, I mean, you got Rose Delights, Can, I'm sure you're familiar with on the beverage side, right? Jeter, Cookies, like, lots of big California names are going the same direction. I think, which at the end of the day, if you try and prohibit a mutually beneficial transaction, you're destined to failure, right? That's why the war on drugs after 50 years and however many $1 trillion is not making progress. There's someone who wants it. There's someone who wants to provide it to them. The markets, find a way. And so I think you're sorry to jump in, but I think you already see it. It's not an if, it's a just look around.
So, and I think that's right. I believe that the majority of cannabis throughout this that come and is sold throughout the United States is going to be from California, Oregon, and Washington. Period. Full stop, period. Hemp is just throwing a different kind of wrench or a different way the river is flowing to get to that legalized market. I think actually it's a net positive because it's going to create questions. Should we decide to get into it, I think we're going to end up putting some real pressure on people to start answering questions. But ultimately, I hope that people are watching this that are realizing the illusion of the democracy we're in should be clear to people that it's like, look at the comments that came in to the, to the drug, I'm dropping a cram.
To the spaces?
Oh,
to the call?
You're talking about the
DEA,
reclassification.
DEA. 40,000 comments, 62% in favor of reschedule, or 90% in favor of rescheduling, 60 in descheduling.
The fact you got 40,000 comments since a record, people are frustrated, and they're not understanding. Every poll is showing Democrats and Republicans alike want this, and the people that are getting in the way are those elected by us. And so, and the people that are on Fox News that are speaking badly about it, Laura Ingraham, I'm looking at you. Just wait for it. Next time she talks smack, wait for the commercials to see who's buying the time. And it's pharmaceuticals, 2 out of 3. So when I look at this nonsense, it's like, I mean, I always knew we were pay to play. That's just what it is here in the United States. But nothing has been more clear than watching this crazy cannabis and watching people like Chuck Schumer do these, pretzeling, reasoning why he can't even get safe banking through. It is insane watching this. So I think at the end of the day, it's also clear. It's also clear to me that it's the states where it was legalized in 2014, Washington, Colorado, and then on. The world has only gotten better. The statistics are exactly the opposite of what Kevin Sabet wanted. Things are good, and people are willing to pay taxes, and people are willing to, they want this plant. So I'm super excited. I know, we've talked about Uncle Arnie's, and some of these other, that is a great alternative to alcohol. And people are discovering it, and it's going to be hard to put that genie back in the bottle. And at some point, if we're delivering great glasshouse farms product to people's doorsteps, they're going to get pissed if you take it away.
Yeah, no, I agree. You've been very generous. I have a couple more actually really important questions, but I wanted to really dive in and understand hemp. So thank you for that. I wanted to ask, Mark, we exchanged some emails about this, but I wanted to talk about how your retail and CPG businesses are doing and how you're kind of shifting towards kind of the value consumer, really providing value to consumer with price, with Allswell and your retail strategy. And I was wondering if you could just talk about maybe how investors or people are not appreciating how you're shifting or the performance. And just to give you as a background, I talked to many brands and many companies, and for some reason, I don't know why, May and June was very difficult in California.
Yeah.
After 420, there was like a real drop off in sales. So can you just discuss briefly, what you're doing and performance and what to expect?
So I'll throw out some of the stats, and then I'll be more play-by-play, and then Graham and Kyle can do the color. So a couple of things from a timing perspective. It was important. We wanted to get the new pricing and retail going before 420, just so we could take advantage of the big peak in shopping. We did most of the stores toward the end of March, and one of the most important things that came out of our stores during Q2, traffic was up 20% year over year, right? So you have a market that competition is really fierce. We were able, with the lower pricing, to bring transactions and traffic up in our stores, which was critical. We actually, I think, grew same-store sales during the quarter 6%, when the market was shrink because of price compression, shrank like 8 or 9% during the quarter. So we hit it at the right time, and all's well, given the combination of really good quality cannabis at an extremely attractive value is help drive those footsteps and keep people coming back. And all's well is now on a unit basis a top 3 flower brand, and that's happened. I mean, all's well really was launched toward the end of 2022, kind of restaged early in 2023. So this has all come about with all's well in about 6 quarters. So tremendous consumer acceptance, and we're going to, from just an operating perspective, we're going to compete with everyone, and we're going to compete, in a big way. I know it hurt margin slightly, but I'd rather have a slightly lower margin and have a growing business than try to protect a margin and be shrinking. So that's kind of what our thoughts are. Kyle, Graham, do you want to add anything on that?
Yeah, I mean, I think it's the Glasshouse special sauce in a nutshell, right? Using our vertical integration to put the pieces together to deliver something that nobody else can, right? It's in some ways it's kind of like Apple and the iPhone, where the guy who wants to do the cool, trick and for the camera can go back to the guy who makes the chip, who makes the circuit board, and they can work together to deliver it. And we were able to put these pieces together. And if you look at the headset chart, you can see, that it's taken the market over right now because it's great. We tested, variety, fresh, for a price that's half of what other people have banners up and they're advertising for. So put that together with our low prices in our stores and the aggressive stance of trying to make the consumer happy, and it appears to be a combination that's reaping rewards. And we just want to do more and more of that, basically.
Yeah, and I would just add, one of the things I'm most proud of from this quarter is that we bucked the trend of retail in the quarter. That our retail actually went up, and the state had sort of gone a little bit down. So and that came with a lot of hard work, but also it's not a hard strategy where people are hurting. Everything's expensive. I mean, I feel like we're on a recessionary footing, just feeling the average consumer where, yeah, they're employed, but it feels like their dollar is not going as far. And we want them to basically, hey, if you want to roll one up, we'll give you something fresh. You walk out the door for less than $10, you actually get a penny of change. So $10. And that, I think, is a special sauce that will work against the illicit market. It will also bring people into our stores. And we're reserving that for our stores and any stores that we manage, because we think that is a winner. So super proud of the team. They're a gritty bunch in all areas.
Soon coming to stores nationally.
That's eventually, yes, the time frame is
in 2026. Anyway, I wanted to get to, as I mentioned earlier, I own a preferred equity, I have warrants, I have stock. I look at your balance sheet, do the greenhouse is $20 million. I have employee retention that's going to come in. But my preferred, and I love it, by the way, I don't do anything. And this is maybe the prize for believing in you, and no one believed in you, besides insiders and like me and a couple others. I'm getting paid a pretty penny. It's 10% cash pay.
If you want to renounce your payment to sell,
I don't want to, but say I'm conflicted because I own the preferred equity and it's about to have an increase in interest, right, on the 31st.
Yeah.
But I'm an owner in the equity and the warrants. And the minute you can refinance me in the preferred equity, I can think of many options that are accretive, almost all of them, actually. And so I'm just curious, balance sheet.
Yep.
Financing.
Yep.
These really expensive preferred. Do I get to enjoy this preferred for long? Or what are your thoughts?
So one, it's important to put it in context of when we did the preferred, because that was 2022. We're talking about the preferred B and C. It was like, I think we may have been the only company that raised money of any size that year. And
yes,
the only way to entice people to do it, because that was what was going to get us to profitability. So it was basically raise the money, execute, or die. And both raise the money and execute had to happen, or it was going to be very, very hard on us. And to entice people, that's what we had to do. It enticed you, it enticed a whole group, and we actually overraised, which is how we got the C. Now, you look today, interest rates are a little bit down. We're already pricing in the Fed chair cutting 25 basis points. A lot of people think next month it'll be 50, maybe. And so as we sit here today and we look at our balance sheet, before I get to preferred, our senior secured, we have basically a little bit more than, or a little less than 3 years to go. It's at 12%. OID, everything is baked in, it's all done. And so we don't have to do anything. It's amortizing about $7 million a year. So it's paying itself off, which is not the worst thing, although we'd really like to use that capital towards expansion. So we all believe Schedule 3 is imminent being the next 60 days or so.
yes.
And that will likely bring more lenders in. We've been told by lenders directly that would do that. May allow us to uplist, may allow a bunch of things. So while we're looking very seriously at different ways to address this, also a higher stock price, we have a shelf filed. there's different things we have. I would tell you that if you're an investor trying to figure out what our next moves are, we are always about today's investor. I'm also part of it. Everybody on this call is part of those preferreds. We need to take them out. They're too expensive for today. But we also
I will miss it.
and here's the thing.
You still have your warrants, Aaron.
Oh, I saw the end comment. I own the comment. That's what I'm saying. It's like it's a huge benefit to the comment.
But Aaron, and here's the thing. You took a big risk at that time. A bigger risk than investor today would take by taking shares, no matter how we decided to do it, or if we even did a new preferred at a much lower rate, almost like you would think about refinance of your house. New bank takes out old bank at a better rate. So one way or the next, as much as we want to take care of those investors that had faith in us, we already have.
You already have. It's already been an absolute home run.
And here's the thing. I would thank every single person that had the faith to do that, because we had a lot of calls and a lot of people felt too risky even at those rates. So I just want to put that in context. At the end of the day, we're on it. It's probably the number 3 most asked questions. It's all about the balance sheet. We have a very experienced executive team here that's done public, private, preferred equity, and we're looking at all our options. And I would tell you, it will be addressed at some point in the not too distant future. I can't say much more than that, but we're being thoughtful about how we do it. And I hear you loud and clear. I hope you're enjoying those checks. I sign each and every one of them myself. You may even see, I usually write a little note to the investors I really appreciate you.
Yes.
Aaron, one last quick comment too, that, all the cash guidance we provide, I mean, we are able to cover the dividends, our debt service, and our interest, right, out of operating cash flow. So we're in a position where we can do the right thing and not have to feel hurried or under pressure to do it, because we're staring down the barrel of a gun, looking at a refinance happening in 3 or 6 months. So we're in a good position to be able to do this in a way we think is right for the company, and not have to do something in 30 days or 60 or 90. We'll do it at the right pace in the right way for the company.
And it makes sense, because if we really are imminent to have Schedule 3 and a lot of these things start to open up, your options will just dramatically expand. So it makes total sense. Little side note, well, on a risk reward basis, it was a great investment. The better investment was actually your stock by far.
Right.
And I remember having those discussions in my head. Should I buy more Glass House at $2 or should I put it in this preferred? And well, you do the math. And common stockholders.
Do you remember at the end of Trading Places, Aaron? Can't we do both?
Yeah, that's right. I love that movie. But the really interesting thing for common shareholders, you're thinking, oh my God, I can't believe they did that at that rate or whatever. But the stock price since you did that preferred offering to make sure you got to the other step, stock price is up almost 5 times.
Yeah,
it's remarkable. But anyway, okay. Last couple of questions. Mark, you paid about $1 million in taxes on it was a really low level of taxes. Can you explain why the tax liability or why the taxes were so low?
So we just a couple of key drivers. So we've completely re-looked at how we've been, I'm going to call it, pulling all the different entities and filing our tax returns. So previously, we had generally been filing returns on an entity by entity basis. We have now taken an approach where we're filing on I'm going to call it a consolidated or unitary basis, which allows us to take entities where we were losing money to help offset against entities where we're making money, right? So we've done that with California. We're going to be doing that with the federal government in 2023. The provision is based off that for 2024 as well. So, I mean, We've engaged Baker Tilly on the tax front. They've done lots of cannabis work. They're, a top 10 accounting firm, so they've been extremely helpful as we've gone through this. We've also gone back to the state of California and asked for certain refunds because of this. Not crazy big numbers, but every little bit helps. More to come on that. We continue to look at, again, the strategy for 280E as the year unfolds and how we want to look at that prior to filing our 2023 tax returns. So I think, again, I won't say we have totally determined what we want to do with 280E, but we've become smarter around how we're filing taxes for the consolidated company.
Great. Kyle, there's a lot of wreckage in California, especially on the brand side. When you put your CEO capital allocator hat on, are you considering any acquisition opportunities, or do you feel like your plate is full between the greenhouses, the hemp, everything else you're working on? How do you think about it?
So I would say it this way, Aaron. Of course, we'll always consider everything, because if something comes down the pike, we have to look at it and does it make good sense. Right now, I think brands are hurting because retail is hurting. If the retailers aren't paying the brands, it's very difficult. Thankfully, we have. Obviously, some of those brands are our big customers, so we think that there's going to be a shakeout in retail. I think the best way for us to help the market would be to manage other shelves. So to me, whether you own it or you manage it, you control it. And I think that's going to be key for us, because then brands will know if we're managing it, they'll get paid. And that'll be healthier for the brands. We can give the best possible deal to the consumers. Great for them. And that means the money is flowing through the circle as it must. The brands can't work for free. And the stores need to pay their taxes, or else we're going to have some issues with the state of California. So we think that's the best place for us to play. I saw that Skylar over at Mammoth bought Papa and Barkley, and he bought 710 Labs. I think
he's just distributing. I think he's just distributing 710. He did buy Papa and Barkley. Yeah.
Okay. Whether either way, I think he's a brand house. That's what he's trying to really do and lean into. He's got the pressure of, he's got to get them on store shelves. At the same time, he's got to get paid. We have different channels to make money, which gives us a little bit of, we can hit a break here, we can hit the gas here. But I think I like both the brands, whether he's just distributing or whether he owns them, very much. So, but I guess the best answer I would say, Aaron, is right now we're focusing in on the retail side and seeing if we can't help the market quite a bit by taking on some of the strong retail and really growing that side of our business and the overall ecosystem.
Okay, great. Last question, traditional last question. Kyle, this is for you. Can you give us an update on prison reform, and how that may tie in with Schedule 3, or I would love to hear any progress.
The hard part for me, where people think that, they assign different political ideologies to me, I'd rather just tell everybody, I never voted for Donald Trump. I didn't vote for Hillary Clinton. I didn't vote for Joe Biden. I'm always a third party person. I just deal with the people that are in power, and I try and advise them the best that I can on policy. And the hardest part about this is I communicate regularly with people that are sitting in federal prison. And the amazing thing is, imagine anybody who's watching this, think about one night in prison. And I'm not talking about a country club where you think you're going to go out and play tennis. I'm talking about hard time. And you have years, if not life, to go. And anything can happen there. You could get attacked, defend yourself, and get life from that. And these people are sitting there in prison right now. And since the last time you and I spoke a quarter ago, 90 days. They've just been sitting there. Now, that's my frustration. I did write an open letter to President Trump when he was president. I wasn't happy. I have not been happy with Joe Biden. If President Trump is reelected, or Ms. Harris is reelected or is elected as president, and they don't do anything, my ire will be directed at them. It is open to anybody. I don't care your party. I believe that Hunter Biden will get pardoned. I believe that Joe Biden will not leave this office and leave him hanging out there to go spend years in prison. I don't see that as a possibility. And I think it's a real problem for the Democratic Party if they just release him and not a bunch of primarily Black and brown people for a plant. And quite frankly, hopefully a lot of other drug sales and all of that, all nonviolent. So the conversations are happening. I want to be thoughtful. Weldon is doing what Weldon does, and he is talking to both potential outcomes. Ms. Harris right now, and the Joe Biden administration right now, and also the Trump potential future administration. I too have talked to somebody who is likely Donald Trump's AG, number 2 in the AG's office, or White House counsel. I believe he would be good on cannabis and better on prisoners. I'm hoping he doesn't have that opportunity if he becomes president, because Joe Biden and Ms. Harris fix it now. I am optimistic. I have been optimistic, and it's hard for me to continue to apologize to these folks that are in prison. But I am optimistic that something is going to happen because it's good for the election for the Democrats.
That's great. Well, thank you so much, guys. As an investor, I'm very appreciative, and my investors are very appreciative of all of your hard work. I just in a very difficult and challenging environment, you're navigating it as best as I would imagine. And thank you very much. This has been another great call.
Yeah, thanks again for having us as always.
Thank you, Aaron. Always enjoyable.
Aaron, look forward to seeing you soon.